The China securities regulator is modifying a decade-old rule that controlled how firms listed overseas share their financial data. The old rule said that all on-site inspections had to be conducted by Chinese regulatory agencies or then rely on their reports. And by proposing to delete this rule, the CSRC, or the securities regulator, is basically opening the door to compliance with U.S. law. U.S. law requires that firms which are listed in New York give their regulators full access to auditing reports, or else they risk being delisted from the NYSE and the NASDAQ.
What does it mean for the 200-plus Chinese firms that are listed in the U.S.?
This is extremely positive news for the U.S.-listed Chinese firms. As you mentioned earlier, we saw a big rally on Friday after a Bloomberg report that regulators in Beijing are working on a framework that will allow most of these firms to comply with U.S. law. The issue of audit access, which has been, the sort of conflict has been going for like 2 decades now, has really weighed on markets recently. And investors will be keeping a close eye on how this plays out and on, whether what Chinese regulators eventually decide will meet all of the requirements of regulators on the other side in the U.S. The other thing that I think will happen is if we get a resolution, it would open the door for a resumption of Chinese IPOs in the U.S., and that's a process that we've seen stall amid all of the various crackdowns of the past year.